Stephen, you're the stocks guy, so have we seen enough good numbers from tech to justify the outperformance that we've seen?
Look, I think we like tech. We believe in the secular growth stories where people are going to continue to look. I think we also have to acknowledge it's become a very popular trade. It's become a crowded trade. And we've seen in the reaction to some of these stocks where earnings have beat expectations, but the stocks have pulled back a little bit. That could continue just because we've seen a lot of money shift into this part of the market. But our view is that any sort of weakness that you're seeing in technology is a buying opportunity rather than this being a time when you want to move out of tech.
Valentin, it's not just tech that's outperformed, it's the mega caps that have really crushed it on earnings. No doubt in part helped by that weaker dollar. What's the upside risk there?
Well, I guess it is the case that the dollar is helping the revenues, especially those coming from abroad at the moment, and that's likely to continue to be the case. If you look at the previous feedback loop we had when the dollar was rallying, it took about like 6 months really for those companies to start to feel the heat from this stronger dollar. So I think we may be only at the beginning of that, in this case, positive feedback loop where really the dollar, the downtrend in the dollar and the expectation of further weakness there may actually continue to support those stocks.
How difficult is it to cling to a thematic trade when you get these huge swings after earnings? If we can just go to my Bloomberg very quickly. This is the ERN function on the Bloomberg, and what you can get is just the average price change on earnings day. Right here, 8% on a company the size of Amazon. That's your average move after earnings. That's kind of scary, Paul. When you look at something like that and your investor calls you up and they say, we got a big move on Amazon this morning, shall we move? Shall we get out? What do you have to say back to them? To say, cling to the theme, stay with it?
Well, for us, one of the things that we focus on with our clients is time horizon. And for our clients, they're thinking out at least over the next 12 to 18 months, if not over the next 3 to 5 years. And when you look at some of these themes like technology or like the FANG stocks, you have to keep that time horizon in mind. And what we tell them is when you go into an earnings season, when you get an opportunity, when you see a big swing in a stock, especially if it's a pullback, if it's a theme you like, be ready to buy.
So be ready to buy. Where else, Stephen? Like from what we learned from earnings season, where does the outperformance justify the valuations?
So when we're talking about the U.S., we're taking a more sector-specific view. So we like technology, we like healthcare, and then on the other side of the more cyclical part of the market, we like financials and we like energy. We think those 4 sectors offer you above-market type of growth with below-market valuations. And we think, having seen the cycle move further along, you want to be more targeted as opposed to owning the market broadly.